once again, we are one step closer to actual trading. Next week is about trade execution. We'll learn about what buttons to click, but not before we dive into our own psychology a little bit. In this week's lecture, I want to step away a little bit from trading. Well, we'll link it to trading, but stepping away from trading, the program, the curriculum, the sources, etc. And I want to talk about how the mind operates and how the mind works. This chapter is, for me in particular, particularly interesting because it just teaches so much about ourselves, right? When we enter this arena, when we start trading, we put our money on the line, and usually speaking, we are very attached to our money. We worked hard for it. We don't want to just, see it go down the drain, throw it in the bin, or somebody else taking it from us. But when we enter the arena of trading, this is something that we just cannot get around. There are going to be moments where we're going to be losing money, right? There are going to be decisions that we make. We want to enter a trade, either to the upside or the downside. We expect something to go up or down, but actually the opposite happens. And when this happens, this has all sorts of psychological effects. And analyzing these effects is something that just teaches a whole lot about yourself, about how, where greed comes in, for example, where fear comes in. And fear comes in very, very often, like fear of losing money, first of all, fear of opening a position, fear of closing a position too late, closing a position too soon, fear of putting your stop loss in the wrong place. So many things that can come. And it's really super cool to actually observe this happening within yourself. And this is not something that we're generally taught, I would say, in school, to really work with ourselves in this way. But trading, if you want to, unless you don't want to get successful in trading, but if you want to get successful in trading, this is a step that is crucial, because if you don't have any control over this factor, well, then you're just going to keep hitting a wall. You're going to keep making wrong decisions. And yes, of course, we have a risk management system, and that can help us. But even when you have a risk management system in place, when the trade goes, you still need to kind of manage that trade sometimes, right? So let's, for example, say we have an entry, a stop loss, and a take profit, but then price just hovers all the way down, up and down within that range, and it just starts to get very tight, and it just makes us make a decision of like, okay, I think I should have, had my take profit hit already, or my stop loss or whatever, and then we can sort of like intervene with the trade, potentially based on an emotional feeling that I should be out of this trade, or something like that. There's so many things that, even when we have a system, still we are the ones that need to pull the trigger, that need to make that decision. And the less we do this based on emotions, I think the better, generally speaking. So emotions is nothing to, I hear a lot of people say this, like we need to sort of like, conquer emotions as if they're not there. That's not necessarily necessary. What we want to do, and this is what I'll talk about in the lecture, is we just want to see them coming. Because if you see something coming, it already, it doesn't take you by surprise anymore. And if something doesn't really take you by surprise, well, the reaction that you have on a certain circumstance, so this also goes for real life, can potentially be different, right? Where you make a calculated, calm decision based on the data that's in front of you, rather than something happens, it takes you by surprise, and you're like, whoa, I'm like super panicky. You close your position when you maybe shouldn't, when it wasn't really necessary, or you open a trade where you shouldn't have opened the trade, right? So that's where we want to kind of get to. We want to get to a point of calm, calculated decision making based on the data in front of us, and we want to ideally do that as calmly as possible. Okay, slides. So 2 chapters. We deviate a little bit from the structure. Our apologies, but it is the way it is. We wanted to add something here, but I think these 2 topics are enough to digest for this week. It's about mapping emotions. Just get a sense of what sort of emotions we encounter when we're trading, when we're investing, etc. And when we do it more often, obviously, well, then you see them coming more and more. You'll remember situations in which you have made certain decisions before, and when something happens again, you can see you remember, like, last time I made this mistake. And now it's not going to happen again. I see it coming. I see the FOMO coming. Everybody's talking about a certain project again or whatever. FOMO arises, but you don't go with it. You see it, and you're like, okay, cool. I feel some FOMO. What to do, but is this really like a good decision? And you go back to your analysis or whatever, your trading plan, your trading strategies, and you make the decision based on that rather than emotion. Okay, so it ultimately will improve your decision making. And in the lecture, I really want to talk about like peace of mind, mental clarity, like how that helps. And this this aspect. So I went a little bit personal perspective, tiny bit, in a little bit of a rabbit. If I went into the blockchain rabbit hole quite deeply, but if there's one rabbit hole that I'm still stuck in there, way deeper, it's the mind basically. So last year I completed a meditation teacher training. So I'm actually like a certified meditation teacher, which may or may not mean that I'm very good at breathing. But I've gone down this rabbit hole even further to really understand how thought works, how the mind works, and much deeper into the very layers of identity, what it's like, what who or what we actually are, etc. But I'll keep that for out of the course for now. It's a different course maybe at some point. But what I wanted to give away is that this scenario at the bottom left corner happened a few years ago, or I think now, was it 5 years ago or something like that, where I got into a leveraged long position and price went against me and I kept it open for just way too long. I ended up closing it in profit, but that was just lucky that I didn't lose like the vast majority of my capital on that trade. And let me tell you, the emotional distress that I had during the time that this trade was open, it was like a multi-week trade. It's just horrendous. It's just not a position that you want to be in. And when something goes south, remember the point of invalidation. You just want to get out of the position, live to fight another day. You've lost, you can analyze it, right? Your stop loss got triggered, or you got out of the position manually perhaps, and then you can analyze it, and you just take that information, what you've learned, you take it on to the next trade, and you don't get into positions where you liquidate your entire account or something like that, right? That's just really not good practice, and you don't want to get there. I do want to say though that losing money is, like, I think I mentioned that before, but that's a better teacher than I can ever be, because it makes you feel something. It makes you, as soon as you lose your own money, you're responsible for that decision that made you lose money. It'll make you, you need to look yourself in the eye and be very honest with yourself. And this is why this is so cool, because it's, for some people, it's very difficult to be really, truly honest with themselves, or with ourselves, I should say. Sometimes that can be difficult. But it's absolutely paramount that you do. So you need to come to terms with the fact that you got greedy, or that the fact that you got scared, or the fact that you, did something because somebody else said it. Okay. So, but ultimately, yeah. So more in the lecture about peace of mind and mental clarity, and you will prevent yourself from certain decision making. And the goal is to operate like surgeons and not like cowgirls or boys, like riding on a horse, guns coming, like, I'm going to, FOMO 100x leverage myself into a certain trade. You just want to work with the data that's in front of you. And if all goes well, and you will find that after a certain amount of time and practice, obviously you need to put in the hours, the trades will come to you. And it will almost feel at times, when you're really, trading in the zone, it will almost feel like you're robbing the stock market of money, or robbing other people of money. It can become that sort of like calm, effective, where you get in, you do your business, you take money from the market, and that's it. And that's sort of like the zones that you want to get to, where the market just tells you a story, and you know how to extract from that with a very, very calm mindset, right? So that's kind of what we want to get towards. So not this emotion. This is, by the way, like what like parabolic moves in a chart look like, visualized as a cartoon. Okay, so to close at least this section, build conviction in a trade or investment. That's something that we can do with this. So the calmer we get, the more confident we ultimately get as well. Like, fear pops up less and less. And we're just simply not afraid to make mistakes, or make wrong decisions. We understand that it's part of the game. We calculate it. We have our risk management in place. And when you have that, it's already like, these are givens, right? It doesn't take you by surprise anymore. And therefore it becomes a much calmer experience, rather than you don't know what you're doing. You press the green button and you sit here and you see it goes up. You're like, yes, come on, right? I mean, if you want to do that, that's fine, right? But that's just more along the lines of horse racing, gambling, and that sort of stuff. If you want to be a successful trader, you want to consistently make money with this, you need to, at least, in my personal opinion and experience, you want to work towards a system like this. So that the psychology of the psychological aspect is incorporated in that system. So building confidence will come after time. Accept mistakes. You're going to like mistakes are an opportunity to learn. I don't really. I think I said it before. I don't like the word mistakes. It's like like we're not supposed to make them. No, it's like that's where you learn, right? When things you come across the boundaries of what is possible or what is not possible, right? And embrace emotion and decrease this reactivity. That's really important. That you don't, something happens unexpected, or maybe not necessarily unexpected, but generally speaking unexpected, and you don't go in like, oh shit, oh what happened? Like close, right? No, that's not what we want to do. We want to say like, oh wow, look at that, and then you say like, do I close this trade now, or like, what are the probabilities still? What is the probability for this trade? Should I close? And you will notice that after time, you will actually, still react, but you will react calmly and calm and collected, based on data. And yes, you will, be able to close a position very quickly, but you do it because you just know everything aligns and it's just like, I need to, it's time to be out of this trade because it's not the same trade anymore. Right? And okay, obviously with trade execution, we'll come back to this as well, how that you actually see what it's like to be in a trade and what then we come across. Okay, and all in all, of course, this brings us one step closer to a winning system. Let me see if I have something to say about a chart. Well, this is, for example, is Tesla, and you can see that there's a lot of volatility, right? So a lot of up and down, a lot of moments to be very euphoric and to be very pessimistic, to be, constant in states of FOMO or in fear. And these two are kind of opposites that you find where, people are just literally, you can, if you type this along the, all the parabolic charts, I mean, this is basically what this looks like, right? And it's that game of of FOMO and fear, and this is just where you not want to be. You don't want to be fearful at the bottom, and you don't want to be FOMOing at the top, right? I mean, that's very obvious that being panicky around here. It's not the time to panic. The time to it's never a good time to panic, I would say. But you want to already make your decisions based on what we did in technical analysis, right? Where you say like, I don't know. For example, we have this support level over here that is, it's sort of starting to fail over here. So I'm talking about this and this. This is where when you're in a trade, let's say you go into a trade over here. Here you want to have your stop loss somewhere. You want to be out of the trade. You don't want to be in a position here anymore, unless it's to the other side, right? And that's sort of like just the game that we want to play. So first, prevent ourselves from like emotional decision making, but it is part of the game. And when we are in a situation where emotions are present, we just want to be calm about it, have them mapped, and see like, okay, yeah, I'm in this position and this is what I do now. Okay. I think that is it for this chapter. The sources, I haven't covered the sources. I don't think that's necessary. Do watch the advanced one with Mark Douglas, Trading in the Zone. If I'm not screwing up his name, my apologies if yes. Do watch that. It's super interesting. And it's, I mean, obviously it's the advanced source, but it's just super fascinating stuff. And in the lecture, like as promised, we will go into this just from a different angle. Let's call it that. Thank you so much, and see you in the next one.